All right, guys, I'm back on. Quick on and off. Hate to keep asking you this again over and over and over, but if you could please hit the like button, really appreciate it. And we're about ready to start. We're 1 minute in front of the report. It comes out in 1 minute. And most of you know this already, but the chart on the right is the Counterpunch Trader, the 377 tick. You could use Counterpunch Express 2 as well. And you just have to do your own key level adjustments. That's the chart I'll be trading. We're going to wait 2 minutes after the report. On the bottom left is the 8-tick momentum bar. It's a mini session for that trade plan, the crude oil session. And then I changed the chart above. It used to be the 5-tick crude oil. That didn't seem like anyone was trading that. A little bit too fast. It can work really well, but I figured let's look at unleaded gas. Let's do something different. And it's Spotlight. Still thinking, maybe we can do Catapult at some point, but Spotlight's a known entity with the crude oil report. All right, so the report's about to come out. You can kind of see. Yeah, maybe it did. My clock might be a few seconds off. So this little spike here was before the release, and then it came out right in this area. I'm going to just kind of take a guess that it was right around in here is the upper end of the report. I'll put it at 76, just work around that key level. And then the lower end seems to be here. Pretty tight range so far. A lot can happen still. It did just come out. We are 45 seconds in. Pretty tight range. I'm just going to put this at that spike. So 77 to 46. I mean, barely 30 ticks, 31 ticks. Real tight range. Again, welcome everybody. We just finished our normal morning session a moment ago, and we're now in our crude oil report session. Still got 40 seconds to go. And a possible setup here, which would be long at 78. It's a pretty big trade. It already spiked up to 80. I'd be tempted to put in a 3-tick adjustment on a 33-tick trade. Maybe not if it pushes through. Then we'll just grab it at the entry. But you can see it's not pushing through. So we have a few seconds to go, and that trade is going to be valid. So I'm going to put that entry in at 81. I hate making that adjustment, but I think it's required in this case. So 81, because I don't want to get long right below resistance. And that bar shows us resistance. So long at 81, targeting 68.11, and the stop would be at 67.49. And it may cancel. Looks like it's going to probably cancel, but it hasn't canceled yet. There is a new short trade now, and that one is at 49. So a short at 49. And that's another fairly big trade. And do we want to adjust that below down to 45, a 4-tick adjustment? And I kind of think you have to. I hate these big adjustments, but they are big trades. And it has to push through the low end of the reaction. That's support right there. And you don't want to get in 2-3 ticks above that with such a large setup, in my opinion. The trade is a 38-tick trade. We could afford a 10% adjustment, basically, is how I look at it, to try to stay out of a losing trade. Does that make sense, guys? That would be targeting 67.11, and the stop would be at 81. It's crappy when you have to make a 4 tick adjustment. But I don't want to get short here. It already would have been short, and then it can't break through support here. And just filled. All right, well, now I wish I didn't make the adjustment. That's how it works. So that trade is in. We got to get to 67.25 to move our stop to break even. And so let's see if we can follow through here. And get out of this range. It kind of came up to test the middle part of this range, found that 50 moving average, and hopefully finding some resistance, and will push lower. It hasn't done so yet. In case anyone is tracking that unleaded gas chart, it did also get short up in the upper left corner. But look at the support it's finding right there at the lower end of the reaction where I put that line. And if it breaks through and makes new lows, we could be in good shape. Did I look at the crude oil report? The details of it? No. Do I even care? No. Would I even know what it meant if I did? Probably not. I'm just looking at the patterns, the price action patterns following the trade plan. I don't care what the report said. I just care that the prices are moving, and I want to take advantage of it. It's a big setup. I'm not usually liking to take trades at these are using bars that are still part of the reaction probably, but I mean, it is the next setup. I'm not going to argue with it. I'm not going to try to second guess it. Big trades work out nice. So right now we're just trying to get to target 1, 67.25, so that we can move our stop to break even. It may self-mitigate by giving a stop and reverse. Hopefully it doesn't. So we want to see it find some resistance up in here and then head lower. Action, reaction with a subsequent action move that brings us down. We'll see if it can do that. It's a pretty significant action move down. Possible reaction, and that's a stop and reverse, unfortunately, at 61. And so we have to respect that, and the stop moves to 61. And let's see if that's going to cancel or not, but that would be an entry to go long, and the failure to get lower could lead to a strong move higher, but let's see if we can get a couple closes below that signal line to cancel that. But right now it's valid. And if it does trigger in, it's targeting 67.84. And the stop would be at 34. And so if you're using bracket orders with the matrix, you could see your handles. You should be able to place that trade. You can cancel that trade. If it cancels, it looks like it's not going to cancel. Let's see. It hit 60. We made the adjustment to 61. Looks like it's going to trigger in, but it hasn't yet. It's trying to. Key level might give us a little bit of comfort here. We have a reaction that's gone about, anywhere from 1/3 to 2/3 of the action move, and we want to see an action move down. But this trade's going to flip over to long, I think. There it goes. Yeah, so stopping and reversing. Now we have a new trade. Again, like I said, it could self-mitigate. Maybe the failure to get lower, no follow-through, could lead to a strong move higher. I don't know. We're right back in the middle of the range. Let's see if we can test the upper end. So we got to get to 75 to be able to move our stop to break even. Target 1, 67.75. So not the most pleasant of sessions yet, but if this trade wins, we'll be good to go. This could be a reaction to this action move, and we could get another move lower. I mean, anything could happen at this point. But notice that we've moved right back up into the middle of the reaction. How many times do we see that happen? Two purple trades in a row, up and down, are not very common. Like, you don't see that very often. Craig Ramsey says just trade price action. Exactly. All right, we're getting close. Let's get to that 75-cent level here. And there it is. We can move our stops to break even. We did make an adjustment, so you might want to go to 59 even and try to stay in the trade. If you move your stop to 62, you can get stopped out. If you move your stop to 59, you still have 2 ticks of risk on the trade. But if it goes much higher, look, it's testing the upper end of the range here. Gee, was that predictable or what? Let's see if it can keep going. Look at how the ranges of the reaction are just, putting up barriers. That's why I put those lines there. If we could get to our target 2, we should have a little bit of a power of quitting thing going on where we've made more, we quit positive. It won't be great, but it won't be bad. A positive result's a positive result. That's a V-shaped reversal. But so far, the support on the bottom and the resistance on the top has been where the battle has taken place. So the failure to get lower, breaking through some support without follow-through, leading to a move higher, but now we got to get the follow-through on the upside. And you can see it's doing its best. Your targets, your first target should be at 84. 67.84. Unleaded gas had a stop and reverse as well. It's already hit its target 1 on Spotlight. And you see a winner on the 8 tick. And look at, we're moving forward. We got a couple more ticks to full target. Can it get there? Just broke through resistance. Where's the follow through? There it is. So that's going to be a power of quitting. That gets us a little bit positive if you're a single position trader. If you're a multiple position trader, like most of us are, you're now trailing. I shouldn't say most of us, like some of us are. The stop has just moved up 67.64. Target 3 is 67.94. That's the next objective. If you do have a second position, that's a good place to take profit, unless you want to trail and try to hit that home run out of the park, which can happen every now and then. I think in the long run, taking profit at the fixed targets is going to give you a higher average net profit, just based on what I've seen over the years. But every now and then, every blue moon, maybe every 10th blue moon, I don't know, once in a while, you get that runner that's the mother of all trades. Like that time it ran nearly $5. You don't want to miss something like that, right? The thing is that just doesn't happen often enough. You're better off taking that fixed target, and the bird in the hand is usually worth more than the two in the bush that don't land in the hand. All right, so the trailer is at 64. It's not going up because of the key level adjustment. If you are on CPX2, you might see your trailer at 66 because CPX2 does not have a key level adjustment tool in it. You need to upgrade to the full counterpunch trader for that. But you can do it in your head. You can adjust around the key levels in your brain, which is probably better for you anyway, because then it becomes a muscle memory. And you don't need the automation or the tool, the indicator, to tell you to do it. You just know to do it. Now the stop moves up to 67. Yeah, Len, I agree. I mean, we've been doing this for years. Len with a comment. He loves the counterpunch trader 377. Even when it's down a little, it seems to come back more often than not. Yeah, been showing it for years and years. I mean, I did it for years when I was still with NetPicks. And a lot of those sessions got on YouTube. And I'm still putting these sessions on YouTube. Only now it's my own, since I left NetPicks. Going on my 3-year anniversary. Coming up next month. Imagine that. Gosh, time flies like an arrow. Fruit flies like a banana. Right. I'm waiting for those scratching your head going, what do you mean fruit flies like a banana? All right. Stop is at 67. It will move up to 68 if the signal line closes at 70, because 2 ticks below 70 is 68. So you can already anticipate it. You can look at the tick counter. You'll know when, and you can move that stop. Sometimes it's good to know because you might have to move it quickly to get it in on time. Claude, no. I mean, we're friends, but you didn't get the memo? I mean, I left them 3 years ago. All right, here's the story. When I was leaving NetPicks, and I have to give them a lot of credit because they encouraged me. They realized I was with them for 15 years. It was my time to do so. They are great guys. And Mark said, well, why don't you put NetPicks in the name of your new business so you don't alarm all the customers because you're going to be supporting them anyway. And so I spun off my business and named it NetPicks Trading LLC. All right, the stop just moved up. 67.79. Target 3 has been hit. And now what do you think about that first losing trade, which cut the risk? By the way, you're getting in here and you're getting out here, but the original stop was way up there. So this is showing you the virtues of a stop and reverse, not something to be feared. Now the stop's at 83. So anyway, they said, why don't you put your name in, put NetPicks in the name of your new business. So I started NetPicks Trading LLC. And it seemed like a good idea at the time, but you can imagine the level of confusion it created over time. Like Claude, 3 years later. Really? You don't know that? That's all right. Anyway, that's why I went ahead and started marketing my brand, Backpacktrader. So Backpacktrader is my brand, and that's what I'm doing business as. But the name of the company is NetPicks Trading LLC, not net picks. And that's the story behind it. That's the reason. Len out at target 2 and 3. I also like the purple trades. The purple trades are, you know what? All right, here's the thing about the purple trades. If you think about charts, they operate on different time frames, right? So this is a 377 tick chart, but sometimes you get trends and swing levels and patterns that fit within slower trends and patterns, like bigger time frame trends and patterns. So you have a swing level that pivots not on the fast chart, but on a slower chart. And the purple trade has a good way of identifying those on the fast chart that you're trading. Now, you can't really see it unless you can imagine it in your mind. It's an abstract concept. But that's the reason the purple trades can be so powerful, is because they are pivot points. Exhaustion levels is a better way of describing it, because that's what they are, on a higher time frame chart, which means probably a more powerful trade, right? Claude, you don't have to apologize. I apologize. I apologize to you for the confusion. It's not your fault. You don't have to apologize. Stop is now at 88. Will works for them and he works for me. So Will is a double agent. Look, I'm still friends. Even Cheryl works for me. I'm still friends with everyone over there. We have a great relationship. We're just completely different. We're different businesses. 100% non-attached, completely separate. It's like the new Coke. Maybe, I don't know. What's that commercial at the movies? Have you seen it? I gotta try it first. By the way, Coke has been a great stock to be in. All right, 67.89 is the stop. Do you like the new Coke? I haven't tried it. I love Coke. I just don't drink it. No worries, Claude. No worries. I'm just happy you're here. I'm happy you're here, and I'm happy you got Catapult. All right, the stop just moved up to 93. By the way, some of you guys may have heard, kind of reignited the mentorship for some people who've really wanted it. I kind of hinted at it during the last boot camp. Some of you have signed up for it. I still got room for a few more. And I'm going to be traveling. Stop just moved to 97. So now the stop, the trailer has now exceeded target 3. Yeah, so Craig endorsing net picks with their HVWT. Yeah, I have no idea, because I just don't know anything about HVWT. But as long as you're succeeding with it, that's all I care about. Yeah, Counterpunch, of course. Spotlight came out of Counterpunch. I actually think Spotlight's better than Counterpunch. Well, for certain things. I mean, Counterpunch is still my strategy of choice for Forex. Maybe for swing trading, although Spotlight works great. And with the fun with moving averages, there's just a lot of things yet to be explored. But yeah, they all have their place. Really, it's just about tools. If you can make money, that's all that matters. That's why you're trading. Doesn't matter what the dots say. The dots make you money, great. If they don't, something's wrong, got to fix it. May not be the strategy, might be you. Or it could be the strategy just doesn't fit with who you are. It could be a good strategy, just not the one for you. Finding your personal style's not easy, it's tricky. But it can be done if you dedicate yourself to doing that. 67.99 is a stop. I like Spotlight for day trading. I mean, you see mostly in the room every day, you see Spotlight. You don't see me walking through Counterpunch. Counterpunch works too. I just think Spotlight's better. Counterpunch is probably harder to learn. it gives you a lot more trades, but you can isolate certain situations with counterpunch and really improve upon it. If you remind me next week, I can go through some of those, what I think they are. Also, you can do a combo of counterpunch and spotlight if you understand both strategies. You don't try to mix and match. You just kind of create your own plan using the best of both. I mean, there's just so many ways to use it because they both rely on the exhaustion levels and the balance line and the price action. And then after that, though, what qualifies a setup? That's the difference. And Spotlight gives you the fun with moving averages setups, which are very unique and can be very, very good. 6803, the new stop. I mean, here's the Spotlight trade. So this is one of those that probably went too fast. You know, remember the spike down and up? We went through that in the last session where I showed you how you could figure that one out. But if you look at it, maybe it was tradable. I don't know. So this is either one and done or two and done. But here you see Spotlight on unleaded gas also. Spotlight came out of Counterpunch and it's newer. It's newer, and in many things it's better. But Counterpunch holds its own. Counterpunch, you know, depends on the trade plan, depends on the trader, depends on how well you know it, how well you know the setups, their strengths and weaknesses. You know, ultimately you have to make it your own. Regardless of what you trade, if you don't make it your own, you never fully understand it because you didn't create it. You understand it when you do your foundational work, your pre-production work, all the stuff we always discuss. By the way, I was talking about the mentorship program, and I'm going to be traveling, and I'm going to be over in Europe in September and October, and I'm setting up mentorships with some European members over there. I'm literally going to pay them a visit and work with them for a day or three in person. And Claude, I know you're over there, so I don't know if that's something that interests you or not, but I just thought I would, you know, make that known that it's something I'm doing. And I'm fully vaccinated, by the way. Okay, crude oil just stopped out. And we're done. And a great session. Hope you guys enjoyed it. But we're done. So this is your chance to ask any questions. I'll give you guys a moment to collect your thoughts and think if there's anything you want to look at or see or whatever. But otherwise, I think we're going to finish. I actually have an appointment that I got to get to, so I'm going to end this here in a moment unless there's like any immediate questions that come in the next few seconds. Claude says CL is flying. Yeah. So just remember, the stop and reverse is often good because we have a technique to try to stay short, right? We adjusted our entry 3 ticks above, and we wanted to see the price action actually give us a little more confirmation that it's going to keep going higher. It doesn't mean it will keep going higher, but it may not even be able to do the extra 3 ticks, and then we'd stay short. It did go the extra 3 ticks, and at some point we just have to scream uncle on the short trade and get out of it with a small loss. I mean, it's less than 50% of what it started with, and then get in on what the price action's telling us, the winning side of the trade. So stop and reversals, that's a good thing. We took a losing trade and lost very little versus a full loss, which would have been quite a bit more painful, right? So stop and reverse is not a bad thing and is not to be feared. And a lot of you hate it. I don't like them, but, you know, the market doesn't care what we like. We just have to respond. The setup came. The strategy mitigated itself. That's the thing that you have to remember. You're very welcome, Claude. Everyone have a wonderful rest of your day. Don't forget, John is out next week. John will be here tomorrow, but next week there will not be a session. Is it next week, John? Am I off a week or two? Yeah, the 17th and the 19th. John will be out of pocket traveling, so no session on Tuesday and Thursday next week, but I will see you on Monday and Wednesday. Have a wonderful rest of your week, and I will see you then.